You're now tuned in to the Desire to Trade podcast, a show where we bring you the best figures of the trading world and teach you how you can become a successful trader. This is your host, Etienne Crete.
Etienne Crete here, Forex trader and founder of Desire to Trade. Welcome to episode 67 of the Desire to Trade podcast. In this episode, I'm interviewing Kevin Davey, a trader who specializes in algorithmic trading. He is the author of the award-winning trading book titled Building Winning Algorithmic Trading System, a trader's journey from data mining to Monte Carlo simulation to live trading. And this is a really in-depth book that you should take a look at if you have a small interest in the topic. What I liked about Kevin is, first of all, his philosophy of looking at simplifying things. He said one thing really special. The simplest solution tend to be the best one. And that's a really important key. You see with the interview that we go through the process, step by step, of what to consider when you want to have an automated system that trades for you. Kevin surprised me by saying that he has over 95 systems trading for him at the moment. And it's a really important point to know how to manage them. So we dive into this topic a lot. If you're just thinking a little bit about automating your trading, this is a really great training that you can listen and learn from. As always, I'm leaving you with the interview and I'll come back at the end with the takeaways. Kevin Davey, welcome on the podcast. How are you doing today?
Great. How are you?
Very good. We always have a question we ask a guest to begin with, and it is, what is one quote that inspires you?
Probably the quote would be, all things being the same, the simplest solution tends to be the best one. And that's Occams Razor. So it comes from a 12th or 13th century Franciscan monk who developed the theory of Occam's Razor. His name was William of Occam, I believe. And it really kind of highlights to me exactly what's important in trading, and it's keeping things simple, because the simplest things I found tend to work the best going forward. You know, a lot of people think, especially with computers and being able to come up with complicated systems and, you know, let the computer run all night and generate parameters and all that, things get way too complicated. And what I used to do a lot of that, but what I found was the simplest techniques, the simplest systems tend to be the ones that work the best in real time going forward. So Occam's Razor tends to be a quote that I kind of live by with my trading.
I love it. That's pretty cool. So what are you doing these days exactly?
Well, right now I'm running probably about 95 trading strategies. About 2/3 of them or so are automated, where I don't really have to do anything. The other ones are manual systems where I still get the signals generated. I just have to manually enter orders. And the reason I do that is because of sometimes platform limitations, for instance, with calendar spreads and some of the futures markets. But in addition to those 95 strategies, as you can imagine, every once in a while, hopefully not too often, some of them stop working. And as I gain capital, I also want to roll out more strategies, because the big thing I've found is diversification in markets, time frames, strategies. That plays a big role in the performance I get, because, you know, you'll have strategy A going up, making new highs, while strategy B is in a downtrend, but they kind of even out nicely. And then 6 months later, it'll be the flip, but you tend to get a smoother equity curve. So most of my time these days, when I'm working on my own trading, is actually developing more and more systems.
And what kind of strategies do you have? Are they all intraday or are they swing? And what market are you trading them on exactly?
Most of my strategies are swing type systems. Intraday systems, I love the concept of, but they're also pretty hard to develop strategies for, at least that I found. And part of that might be the way I develop systems. I like to go probably about 10 years back with looking at the data and running historical tests. And it's really hard to find intraday systems that last for that long of a period. So most of mine tend to last 1 to maybe 10 days or so. So I do a lot of that. And as far as markets go, I look at basically any market in futures that you can trade. I stick mostly to the US exchanges. I do some European exchanges, but for the most part, it's the US exchanges. And it's pretty much anything from cocoa to soybeans and corn to interest rates like the 10-year and 30-year note to stock indices, precious metals, energies, currencies, basically the whole gamut of possible markets.
Mm-hmm. And how did you first get involved in the trading world?
Well, I started probably shortly after I graduated from college, and which was probably more than 25 years ago now. And what enticed me to it is I got a piece of direct mail. Back when there used to be a lot of ads that would come through to your normal mail. This was long before email, and it was about a commodity trader, and he was selling a system, which turned out to be based on head and shoulders patterns. I read through this long document that explained how easy trading was, and how you could leverage and become a millionaire overnight kind of thing. And even though I didn't really believe it, I still got kind of hooked by it. And the funny thing was I actually bought the course, and then even though I knew almost nothing, I realized it was junk, and I ended up returning it. But by that time, the seed had been planted that, hey, trading could work. And when you combine that with my background, which is engineering and math and science, I'm a numbers guy. And a lot of trading just kind of seemed to be numbers related. Okay, well, you back test things, and then you calculate, well, that have worked, and you have to write some little computer programs and that kind of thing. And it was just perfectly suited for something I really liked, and eventually took a while, but eventually something I think I got fairly good at.
And did you start off from the beginning with systems trading, or did you go more manual to start with?
I remember my first real system was, so I never even really tried, except for paper trading, that head and shoulders pattern. That kind of trading just seemed too sketchy to me as far as, oh, well, this head and shoulders pattern, yeah, you should have taken, but this next one, which almost looks exactly like it, you shouldn't take. And for somebody with a kind of numbers-based, analytical type brain, it's hard to see the differences. So discretionary trading didn't seem to be for me. So what I found was, once I started digging into it, I found a moving average type system. And one of the first things I ever traded was a moving average crossover. So it was I think it was a 4-bar, 9-bar, and 13-bar moving average triple crossover. Once those things cross, you buy, and if the opposite happens, you sell short. And I remember I didn't even have a computer at home at the time, so I was calculating these things by hand. Whoa. Every day. I'd get the newspaper and get the closing prices for 4 or 5 commodities, and I'd track it. And it didn't quite work out the way I had thought. I started with a real small account, so it was like $5,000, I think. And I could only trade a few things like lean hogs. I think at the time it was called live hogs. And that's the one I remember, but I was trading that. And within a couple weeks, I had lost like $1,000 like that, or $1,500, something pretty bad, based on a $5,000 account. So what happened was, after I did that, I said, well, if that system's not working, then the reverse of that system might work. Classic kind of rookie newbie mistake. So then I switched everything. And so instead of going long when a certain crossover occurred, I went short. And that started to work that worked for a teeny bit. And then, of course, lean hogs had a big trend. And of course, I was on the wrong side because I was trying to trade counter trend with, and a moving average system is a trend following. And so then I think I lost another $1,000 or $1,500. And all of a sudden, before I knew it, I was down, I think, about 60% from my original capital in this account. And at that point, I said, you know what, I got to step back and take a break and learn about all the other things, besides just the system part. It's, there was the psychology part and all that. And so then I started learning all that at the same time trying to develop some new systems.
And by developing systems, do you think you've been able to kind of avoid the psychology topic, like avoiding dealing with psychology, or you still have some things to deal with?
Yeah, I think a lot of people, unfortunately, I think get into this system, algorithmic trading, whatever you want to call it, thinking that, oh, hey, then, the emotions won't bother me.
Uh-huh.
And I see people out there who sell that as kind of an idea. And, we've all heard about the Forex expert advisors, where the robots, where they can do it for you and you don't have emotions. You just turn it on in the morning, you come home at night and count your money. That's just not true. You still have a lot of emotions with automated trading, algorithmic trading, whatever you call it. It's just the emotions are different. So, for example, instead of staring at a chart, thinking, oh, should I buy or sell here? This looks like a pattern shaping up. Instead of the emotional stress of that, you're left with, oh, okay, well, my system now has had 3 losing trades in a row. Do I keep it turned on? Or there's a Fed announcement tomorrow. Should I turn my system off because, I don't want the volatility kind of thing. So there's anytime when there's money involved is the way I look at it, there's going to be emotion, and it's just different. And I think it might be a more controllable than a pure discretionary approach, but there's definitely still emotions there.
And what are the ways you found you could deal with it?
Well, one of the big things is probably the simplest thing. I used to track my equity. So I trade a bunch of accounts. I think I trade like 8 or 9, maybe 10 accounts. And so, at the end of every day or early in the morning the next day, I'd add up all my equity and look where I was. And, obviously you'd compare it to the previous day and the previous week kind of thing. And I found that stressed me out a lot because I'd be up a few thousand today. Well, yesterday I lost a few thousand. And, every day it was just bouncing around. Obviously you're hoping it bounces around going up, but still the stress and just the anxiety with all that up and down motion just kind of freaks you out. And it even happens on an intraday basis where I've had days when I used to look at things, I'd look in the morning and I was up a few percent, maybe thousands of dollars or something. And then by the end of the day, I had lost that amount. And that would just drive me batty. And so what I started doing was I started just tracking the equity on a weekly basis. Mm-hmm. So it's not to mean I check my systems obviously during the week and during the day, but I'm not checking, hey, are they making money? I'm just checking, hey, are they working right? And the money part becomes secondary. My focus becomes on performing and making sure that everything's performing correctly. And then at the end of the week, I'll tally it all up. And I found that's a huge stress reliever.
Mm-hmm. Yeah, I think what you mentioned right there is really a key part, because even myself, I was like guilty of looking at my profit probably every single day sometimes. But now I'm doing it pretty much like once per month, and that's about it. Like I don't do it that much. So, but it makes a huge difference in how you think, for sure.
Yeah, my goal is to do what you're doing and get to once a month, but I'm not quite there yet. Uh-huh. But I think I'll get there eventually because, it's nice because it just changes your focus from am I making money to am I doing things correctly? Uh-huh. Uh-huh. And as long as you do things correctly and you have a proven way of, generating the money part, you do it correctly, the money should follow. Is the way I look at it.
Well said. So how do you spend your days today? Do you still work on developing systems, or is it mostly maintaining what you have? Because like 95 systems is a lot, right?
Yes. So it's kind of a little both. The actual systems themselves, there's not much to do while they're running. So, I can check a few times a day. I can remotely check in and say, okay, are my positions all matched up? So obviously that's kind of critical. Then there's all the rollover part, especially with these swing systems. You got to keep on top of making sure you roll over contracts, which isn't too bad, except like the energies, which roll over every month. So those are a little more frequent. So I do that. Then the way I develop systems, I use what's called walk forward optimization. And what that does is it requires you to re-optimize every few months for me, it's usually every 3 to 6 months, depending on the strategy. So probably 10 to 15 strategies a month, I have to re-optimize. Again, that doesn't take too long, but it's something that has to be done. It's kind of like a maintenance activity. And then most of the rest of my time when I'm working on my own trading and not working with other traders, which is something else I have time to do, when I'm working on my own trading, I basically just work on developing new systems. So, a couple hours a day, usually I'm either developing new systems or maybe analyzing some of the position sizing I'm using and seeing if I can change some of that. Or, there's a bunch of other trading related tasks that I usually end up doing.
So it's a lot of analysis, right?
Yeah, it is. And it's, obviously the tough part of the analysis is once you get a lot of systems and that kind of thing, you want to really analyze it. Oh, what's my, return to drawdown ratio? What's my Sharpe ratio? And you want to do all this stuff. And then I want to, make sure I do the position sizing the most optimal way and all that. And the tricky part about all that is just because you can do all those things doesn't mean you necessarily should. I always try to keep it in the back of my mind that, yeah, I can look at my past history and, play with, say, position sizing and come up with something that just looks phenomenal. But will it translate into real time? And usually the answer is no. And so I'm always cognizant of making sure I don't over optimize or over analyze what I'm working on.
Mm-hmm. And how do you find the limit between what you just talked about? So optimizing versus kind of over optimizing. Is there like a way to figure it out, or is it just a rule of thumb?
It probably started as a rule of thumb, and then it just kind of evolved into something that tends to work for me as far as I have a certain a pretty rigid process I follow when I'm developing systems, for example, and for when I'm analyzing portfolios of all my systems. And the trick is just to realize, well, hey, just stick with that. You don't need to get super complicated. So it's just kind of been an experience thing that kind of remind myself every time I try to get too cute with the way I analyze things or overanalyze, that it usually ends up not working out good. And so I guess by that, it's sort of a rule of thumb that I just know how far I can push things. And again, I go back to that quote I'd mentioned originally. Mm-hmm. Keeping things simple is really a good way to go with all this.
For sure. And I want to touch a little bit on your process that you go through. So if you had to start from scratch today with like no system, how would you go about developing a new system?
Okay. Well, the first thing you got to do, at least that I do, and that a lot of people don't do, is you got to know where you want to go with all this. You have to have some kind of parameters to say, this is what I'm looking for. And it could be, hey, I'm looking for an ES strategy that makes X dollars per year historically with a certain drawdown, or, all based on, say, trading one contract. Or you might have another set of parameters that says, yeah, I want a system for crude oil that trades intraday and with some performance parameters. That's the big thing first. And the reason that's so important to know what you're looking for is so many people fall into the trap of developing a system and without any kind of objectives, and it looks good, but they'll say, I bet I can do better if I just put a little filter here. Or they'll go and look and they'll say, well, every Friday, if I just remove Fridays and traded twice as much on Thursday, my system would be 5 times better. And so they go and they use the results, and what they do is what I call building a better back test. And they get this great looking equity curve by doing that. But all they're doing is just fooling themselves, because building a better back test isn't your goal. It should be just to meet your initial performance parameters. And I found that's one of the toughest things to do, is to have some parameters set up for performance. And then let's say you have a strategy that meets it, and then to not want to improve it. You stop and say, well, hey, this system isn't perfect, but it meets what I want, so I'm going to keep going. So, I mean, that's the first thing. Then, once you have that, you really have to have some trading ideas. Now, a lot of people think they have to spend a ton of screen time to understand the markets and, that they have to develop a theory on their own of the market. And that's not necessarily true in my experience. I do some of that, but you can also go and look on the internet, for example, at just free trading systems that are out there. And you'll see all sorts of things, pattern-based ones, indicator-based systems, all sorts of different hybrid systems. And that can be your starting point. I mean, it's just a trading idea. Does it work? I don't know. And that's why you go to the next step, which is actually testing. And there's a few steps in the testing process, but really what you want to do in the testing is just prove that that idea historically works. And the ironic thing is, and probably the good thing is, most ideas do not work. There's a lot of people trying to develop systems out there, and also a lot of hedge funds and those kind of people. And unfortunately, just most of the common systems out there that you hear about just don't work good. A good example is most books and magazines will have trading systems in them, and maybe they worked up until the time they were published, but then they kind of stop working afterwards once they're out in the public domain. But you can actually use those as a starting point for your own testing. So, you have to have a pretty rigorous testing process to make sure you're not overfitting and, that kind of thing. But then once you do that, one of the things I do at the tail end is I actually watch the performance in real time. Now, I don't mean like look at it every day, but I'll develop a system and I'll set it aside and I won't trade it live, but once a month, I'll look at how it performed that previous month. And you do that for a few months. That's all live data that there's no way you could have curve fit to it because you didn't have the data when you developed the system. And that turns out to be a great way to prevent the, developing system on Sunday night and start trading it Monday morning, because you're so excited about it and right away it falls apart because you've overfit the system. So that's really a key component. You want to make sure the system continues to perform with, real-time unseen data. And then once you do all that and you decide, yeah, this system is something I actually want to trade, you have to introduce it to your portfolio, meaning you probably won't want to trade it if it's perfectly correlated with another system you're trading. Although maybe you will. I mean, the point is you have to look at it and see what it does. Does it actually improve your overall performance, or does it just add more risk without giving you the reward? There's a lot of things to look at there.
Mm-hmm. And are systems tough to code, or is it something that pretty much everyone can learn to do easily?
I think everyone can learn it once you learn the basics of the trading language you're working with. So, for example, I use TradeStation, which has been around a long time. It uses easy language, which is pretty simple. I mean, you could say something like, if close is greater than the close 5 bars ago, then buy the next bar at market. And more or less just what I said, you just type in and you'll have a system. Obviously, you can get a ton more complicated with all sorts of indicators and all sorts of if statements and conditionals and all this kind of thing. But, what I found a lot of systems that I develop are really simple. And so it might be as simple as a momentum type system. If the close is greater than the close of X bars ago, buy the next bar at the market. I mean, that could actually be the start of a system. And, maybe you put a stop loss with it and you have a short entry and there you go. And it's only like a handful of lines long.
Yeah, and the important part though is that you've tested those systems, right? They're maybe simple, but you've tested all of them, I guess.
Right. And because if you don't test it, then you're just guessing. And unfortunately, I think that's what a lot of people end up doing, or they'll see, oh, well, yeah, but the system, it didn't work for 10 years, but it worked the last 2 months. So now I'll trade it, things like that. The key is you have some criteria set up that prevent you from doing those things, because, a lot of people will tend to if they don't have rigid rules, they'll tend to bend those rules.
Mm-hmm. And how long would it take for you to create a system from scratch? And how long would it take for, let's say, a beginner to do the same thing?
Well, it can take anywhere from like a day to a couple weeks to a month. It really depends on the person. So, for example, I have some traders I work with who went from basically just knowing the language to programming a system that was pretty good in less than a month. In that time, they tried a bunch of different ideas, which was pretty quick. If I go in with something that I know is kind of a decent system, it's pretty easy to develop and kind of finish it in one day. That's not, the actual steps that I go through aren't that complicated. What takes longer is usually finding that idea in the first place that passes all that. The one thing
tweaking it, right?
Yeah, exactly. And there's obviously, you got to be careful with that tweaking, that you're not just curve fitting the historical data, because that's what a lot of people do. But I tend to put a time limit on everything I do. So I give myself, okay, well, I want a mini Russell system, so I'm going to try that for a couple weeks. Now I'll be working on other stuff at the same time, but I know in a couple weeks, if I haven't come up with anything, it's probably just time to move on, because based on the way I do things, my history tells me if I spend more time on it, that I tend to kind of over optimize and put too many variables in. And, all of a sudden I've got something that's really complicated, which I don't want. But that's one of the keys, is you give yourself a time limit that kind of fits the way you work, and that also prevents you from doing too much.
For sure. And speaking of stop losses, how do you set them exactly?
Well, usually I use stop losses based on dollar amounts, which I know a lot of people probably will hear this and they'll say, wow, he's crazy.
Yeah, I'm thinking that's not the best way, but go ahead. I want to know why.
And I agree with you. It doesn't seem like the best way, but every time I've tried, well, I don't want to say every time, but most of the time when I try something that's like a volatility-based stop loss, the performance of those are almost always on a risk-adjusted basis, not just a net profit, are almost always worse than just going with a set stop loss. And some markets are a little flakier with that kind of thing. And you wouldn't think something like crude oil, well, hey, if you had $1,000 stop in crude oil back in 2008, you were probably getting stopped out a ton because the market was so volatile. So you got to watch out for that kind of thing. And so what I've also done is kind of a hybrid of the two approaches, where I do calculate an average true range-based type stop, a volatility-based stop. But then on top of it, I put a limit of, a certain dollar amount. So maybe today the stop might be $1,000 with an upper limit of 2,500, but the ATR stop might be $1,000 or so. But back in 2008, maybe it was up to $2,000 or $3,000, and then I limit it to 2,500. So it's kind of a hybrid approach, and that seems to work pretty well too. But yeah, as weird as it sounds, what works a lot for me are just simple dollar-based stops, and I can't really explain it other than I'm guessing there's traders out there who, when a certain pattern or level is reached, they kind of still think, okay, well, I'm going to risk $1,000 per contract, and it's almost like a self-fulfilling thing that the market kind of reacts to that or adjusts to it. But that's just a crazy theory. But yeah, I've definitely seen I've had more success with dollar-based stops than any other kinds.
And for people wondering, what kind of win rate can you expect on? I'm guessing it's going to vary a lot, but on average, like what could you expect?
Well, it sort of depends on the strategy you're looking at. Obviously, if you're doing like trend following, 30 to 40% is usually pretty good. Some short-term counter trend strategies might be up around 70 or maybe even 80%. I used to trade an option strategy that actually was over 90%, which you would think, wow, that's great. Well, the problem was, you notice I said I used to trade it, and the problem was the win rate. The win rate was so high, but they were all little wins. But when you lost, you got killed. And overall, it just wasn't worth trading. I mean, I think it still made money, but it just on a risk adjusted basis wasn't good. So,
Was that option selling? Yeah.
yeah, that was an option selling
Yeah.
approach, which was just high percentage wins. But when you'd lose, you'd get nailed. Personally, now that I'm trading a bunch of strategies, I don't even look at winning percentage ever. I just look at overall profitability and then the ratio of the profitability to the drawdown. So a risk adjusted return. That's all that matters. So if I have a system that wins 10% of the time, but makes money over the long run, I would still consider it. Now, that's something that somebody who's trading maybe one system can't do. You know, there's nobody who's going to start trading one system where they lose 9 out of every 10 trades because they're going to give up, you know, because they're going to get hit with a streak that's probably a lot longer than 9. And they're going to, you know, curse at the screen and just say, I'm quitting. But I can do that because all I'm looking for is just long-term profitability. And if it loses 9 out of 10, but that 10th trade makes all that money back plus some, then it's good. So you really got to look at the, you know, the expectancy of a system more than just the win rate, in my opinion.
Yeah, for sure. That's a good point, no. So what do you think the listener should get out of this interview?
The big thing is, let's just say you're interested in this kind of systematic, mechanical, algorithmic kind of trading. The biggest thing, once you know you're interested in that, the biggest thing that you should understand is that it best works as a process where you have just a set way of doing things, and then you just try to crank out system after system, and you try to do it multiple times. You don't go for the Holy Grail of trading systems, you know, with one system. I know people who've tried to do that, and they've spent years working on one system, and they're constantly adjusting and changing their system. But unfortunately, it never works because they're just chasing something that's unattainable. But when you start to think, you know, a system approach with multiple systems, you all of a sudden realize you don't have to come up with one perfect system. You can get by with 10, 20, whatever, good systems, ones with drawdowns, you know, ones that sometimes are ugly, but over the long run, trading all those together is actually a better way to go than looking for that Holy Grail type system.
That's pretty insightful. I love it. And I'm going to guess that you don't look at your trades like 1,000 times during the day, right? You're just going to step aside and let your system do the work.
Right. That's what I try to do. Of course, and you may have heard it earlier in the conversation, but there was, you know, a fill alert where it said order filled. And because that's constantly happening to me. And so, you know, the normal tendency a lot of times is to just look at the trades sometimes. But I'm at the point now where win or lose, I'm like, oh, okay, it exited. Oh, wow, that trade was bad. You know, that's what I find myself saying, not, oh, yeah, that was a great trade. I find myself just looking at the ones that are bad and I'm like, oh, that's awful. And then sometimes I might even pull up an equity chart just to convince myself that, yeah, it might have had one bad trade, but it's still kind of trending upwards. And then, you know, I just let it go. That's a hard thing to do. It's hard not to interfere, for sure. And what I found is the more systems you trade, the harder it is. And I tell people it's kind of like if you lie to people. So, you know, let's say you want to tell somebody a lie. You tell one person one story, tell another person another slightly different story, tell a third person, you know, a different twist, you know, because you're lying to all of them, but you kind of forget the details. And then all of a sudden you don't know what lie you told to what person. And eventually it all unravels. Same way with trying to lie to your trading systems, you know, where you try to overrule them or turn them off or turn them on. You get so confused that it's better just to tell the truth to everybody and to all your systems and just let them go. And that's a really hard thing to do, though.
Yeah, for sure. So how can people find you?
They can visit my website at kjtradingsystems.com. You can also just Google my name, Kevin Davey, and I should pop up. A lot of my things pop up right at the top. And then people can also send me emails at kdavey@kjtradingsystems.com. As you know, trading's kind of a lonely, solitary existence. I work out of my house, and most of my interaction with other traders is via email or maybe Skype calls and that kind of thing. But for the most part, it's kind of a lonely career type thing. So, for anybody out there who has some questions, feel free to send them to me. I'm more than happy to answer and help out new people.
I'm gonna guess you're on social media as well, right?
Yeah, you can find me on Twitter. I think I'm KJ Trading over on Twitter, and then LinkedIn and Facebook. Basically, if you search any of those sites just for my name, because I use my real name everywhere I am, so you can find me there.
Yeah, much easier. Cool. And Kevin, what kind of goal do you have for the future?
My goal is just to keep trading and building my trading account. I don't have any kind of goal to retire or anything. I mean, I kind of see this as, for good or bad, kind of like a lifelong pursuit. The nice thing about trading and the way I'm doing it, I can pretty much do this from anywhere. So, for example, last month, I took my kids to California for a Minecraft game convention, and we went to Disneyland and the SeaWorld and did some stuff. But at the same time, I had a computer with me, and I could log in, and I could still, even though I wasn't quote unquote, developing systems, I was still trading. I was still active. And so I can do that from all over the world. And that's kind of my goal, is really to set things up just so I can do this as long as it interests me, which probably will be forever, the way I see it.
And what's your main motivation to keep trading, like again and again, so like waking up every day and keeping your systems alive?
Obviously the money is part of it. I'd be lying if I said, oh, the money doesn't matter, because it does. But the money is almost more just a way of keeping score that, yeah, I'm beating the market. I'm beating, I'm not one of those 90% people who blow out their accounts kind of thing. So that's important. But the big motivating thing to me is the whole challenge puzzle type thing. Here's the market, and all it wants to do is take your money. I mean, it's amazing how easily the market will take your money, and it does so relentlessly. And so to be able to, I don't want to say fool it, but be able to outsmart the market and actually take in money where most people are giving it away is a really neat feeling. And that's probably the biggest motivation, is just the whole challenge of it. And I still find it's not like after 25 plus years, like I've solved it and figured out everything there is to figure out. I mean, I find myself still challenged all the time with the market. So it keeps it interesting that way.
Love it. So Kevin, I just want to remind the listeners that all the show notes are going to be on desiretotrade.com. So if people want to find the links that we talked about, desiretotrade.com is going to be the place to find everything. And we'll make sure to put all the details so people can find you pretty easily. And Kevin, we have one question we always ask the guests at the end of the podcast. If you could give only one sentence of advice for traders, what would that one sentence of advice be?
That's a great question. The one sentence would be, treat trading as a business.
One of my favorite ones. I love it. Love it. Kevin Davey, thanks so much for being on the podcast. It's been a pleasure to have you here.
Well, thanks for having me. I appreciate it.
Great. So I'm not expecting to come up with a trading system that's going to be automated pretty soon. Nevertheless, Kevin is definitely one of the guys to go to for systems trading. I recommend you check out his stuff that he's doing in his book. Everything's going to be in the show note at desiretotrade.com/podcast. Just scroll down to find the episode. Now, I do want to remind you that you can check out the academy that we have, the Desire to Trade Academy, at desiretotrade.com/join academy, and you'll see everything that's in there. I want to say that I liked one of the advice mentioned by Kevin about treating trading like a business. That is an awesome advice that you've heard probably a lot of times on the podcast too. So if you want to connect, check out the Facebook group at desiretotrade.com/group. It's a great way to connect with traders, share your thought and your comment on the latest things I'm putting out there. So I look forward to see you there, and I'll see you again on the next episode of the Desire to Trade podcast. Ciao.
Thanks for listening to the Desire to Trade podcast. To get all the information on this show, free articles, and unique resources, make sure to check out www.desiretotrade.com and subscribe. Please leave us a review and let us know what you thought about the show. It's time to become the best trader you can be. See you next time.